Time now to rock and roll with the legend himself, the Einstein of Wall Street, Peter Tuchman, senior floor trader at TradeMoss and one of the go-to voices here at the New York Stock Exchange. Thank you for being here ahead of Thanksgiving.
100%.
It's great to have you here.
Yeah.
What a market. We've been up, we've been down. Right now, we're only 1.1% off the all-time highs. What's going on?
So what's going on is this. The market made it very clear to us last week that with all that's been going on, with the government open, government closed, NVIDIA earnings, Palantir earnings, all that kind of stuff, that what is actually moving the market, what the market cares about, is interest rate cuts. That's the bottom line. You know, we saw NVIDIA, we saw Palantir earnings blow out 7 days leading into the earnings. It went up, 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 up. It sold off 8%. That brought on a wild and crazy story about AI being a bubble and all that stuff. When if you really look at the a basic old Wall Street tenet, which is buy the rumor, sell the news, when you rise up into the earnings for 7 days in a row and you have blowout earnings, there's going to be profit taking, especially with all the uncertainty, in the market on top of it, right? Many moving parts. But they decided to weave this wild and crazy story that this was the key, that it's the top, that AI is not real, you'll never see this again. And then they built a story around fear around what's going to happen when NVIDIA does the same thing. Well, the difference is that NVIDIA sold off for 3 weeks into the earnings, and when they had blowout earnings as well, it rallied. What ended up happening was, when the Federal Reserve chairman came on a couple of weeks ago and he said, after he had made it very clear to the investment community that we are going to have another cut in December, it appears that a lot of the major big players must have huge portfolios that are very interest rate sensitive. Because the minute in his press conference, he said, December is no longer a surety, to use his exact words, the market sold off 1,000 points aggressively, quickly, fast and furiously at best. And so that was the first thing to key on. Okay, the market is not liking that. I always say, when in doubt, let the market tell you what it thinks of the information. I mean, the market is very transparent, right? That's the wonderful thing. We try and always read into it, but the market tells you what it thinks of the information. And so that made no sense, because we first of all, we've been driving blind and not seeing what's going on. We don't have that economic data. Then they kind of gatekeeped it a little bit, if that's an English word. And so that sort of set in motion this sort of level of confusion around, we actually went from a 14% probability of there being an interest rate cut to an 85% in 7 days. That's crazy. You're talking about trillions of dollars implicated here that were really up and bought and sold and made and lost around this information. And so I kind of feel like it was irresponsible. I kind of think it was disrespectful to the retail community, not thinking that people are going to respond to this stuff. And they did not even give us the information enough to say why it was no longer a surety. At the end of the day, I kind of think it was a little bit of Mr. Pow, Pow, Pow poking the bear, perhaps. But anyway, all the market cares about is the interest rate cuts. Now that we have an 85% probability that we will cut in December, it feels like the market, the runways are clear, the table's been set, and we're off to 50,000 on the Dow and 7,000 on the S&P.
We wait to see if the table is set for a so-called Santa Claus rally for a market that's already up 13% year to date. That also may have been unthinkable if you go back to the Liberation Day lows on that Monday, April 7th. What sets the stage to you, and most important to pay attention to for December?
So let's also talk about the fact that February, March, and April, you and I have spoken regularly since then. That was sort of when the market sold off 20.8% in a period of 11 weeks. That was that self-inflicted economic Armageddon, to quote Mr. Dan Ives, caused by the new administration's way of disseminating the tariff information. Throw out a little bit of a large swath of 185% tariff, pull it back. That sort of passive-aggressive approach to disseminating information. And so consumer confidence was in the 88 level around then, after the February, March, April sell-off. Okay, when Mr. Trump came into office, it was at 112. So anything below 100 is actually negative consumer confidence. Yesterday, before this sort of last couple of days of a rally, we hit that same level. Consumer confidence, we hit the same level, or even a little bit worse, than we did back in April. So what that says to me is a couple things. First of all, the market and the economy don't always trade in concert, that people who are living paycheck to paycheck may not be those who are trading the market. They're not participating in this rebound that we've had. And so that's worth looking at. I think for December, look, anything, we know that we're one tweet away from Crazy Town. Anything can happen. I think one of the most significant things as well is that Mr. Besson implied that Mr. Trump is going to pick a new Fed chair before Christmas. Now, that will surely be a Christmas present to the market, because the poly markets of the world are predicting that it's Mr. Hassett, and he is a dove, meaning that he is going to follow in the footsteps of Mr. Trump and not Mr. Powell, and that he will be more likely to give Mr. Trump the 300 basis point cut that he desires. And so that will be pouring fuel on this fire.
You've been here at the New York Stock Exchange for 40 years. Does this moment in the market remind you of any other time in your trading career?
So, they tried to impress upon us all that we should be having some kind of a post-traumatic stress revisiting of the bubble of 1999, 1998, 99 period, or is, as Andrew Ross Sorkin said in his 1929 book that just came out, that this is that there's a lot of margin call going around, that there is part of this is a bubble story, right? We know that's been one of the affecting parts of the crypto story, right? We know crypto's down at the 86 level where it was trading back in April. We know that is a function of, if you look in the nooks and crannies, that was not a function of anything more except massive margin calls. People need to understand that crypto brokerage firms offer 50 to 100 times margin when buying Bitcoin. And so when you revisit the price you bought it at, people are being forced to have a margin call and go and come up with money. That was another contributing factor into that big sell-off, those weeks that we saw where NVIDIA got smacked down 10% and Meta and some of these other names, because people are going to try and get cash to protect their Bitcoin positions. And so that was it. I think December is going to be extraordinary in lots of ways. We're going to know a lot more. People need to also understand that I believe 75% of the profitability of retailers happens in the next 3 or 4 days. Right? I mean, they can go from negative to positive on Black Monday or Black Friday, whatever it is. And so that will be very telling. That will tell us more about the state of the consumer than about the state of the market.
What do you think retail investors should know about chasing momentum, chasing the shiny things? There's a lot of them in this broader market these days.
There is. I don't believe there's ever a bad time to trade the market. I still believe that this pullback that we've had was just nothing more than a buying opportunity. Although it's funny, when you're in it, it doesn't feel that way.
Never.
When you were in that February, March sell-off, even Dan and I were just talking outside, I thought, okay, I wasn't clear that this was not the beginning of a much worse situation, but then I couldn't put myself in the head of Mr. Trump. So I didn't know what his plan was, that he was going to tell everyone to buy the market and that we'd get back to even in 4 weeks, right? So it's just fascinating. It's just, every day I come in here and I'm amazed at how resilient the market is, how exciting it is, and that people need to do their homework too. And that if nothing is fundamentally changed in a story, we always see the baby gets thrown out with the bathwater too. You're going to see, it's funny, the analogy, Macy's, I'm going to use my Macy's analogy, that if I see a beautiful leather jacket in Macy's in the window for $700, and I just, it seems a little pricey, and I walk by and I really want to buy it, I figure, maybe I'll wait till it goes on sale. When it finally goes on sale, I don't walk into the store and go, I don't like it anymore. It's trading, it's 50% cheaper than it was a week ago, but it doesn't look as nice as it did then. Same thing with the market. NVIDIA down 10% or Bitcoin down, maybe Bitcoin's not the right example, but there are things in the market that if you like them and the story has not fundamentally changed, then when they go on sale, that's what markets do. Or
even better, as I learned from the great Peter Tuchman, buy stocks, not stuff. Had you invested that $700 at the beginning of the year into Macy's, Macy's stock is up 32%.
Is that amazing?
Here in 2025. I've learned that from you.
Invest in stocks, not stuff. You know what? Look, I think everyone should have some skin in this game. I think it's really an exciting thing. We're seeing, this democratization of the trading community that started around the time of COVID, that has now really grown. We saw a number of those retailers get smacked around pretty bad during COVID and the meme phenomenon, but they're back. Right, and I would imagine a lot of the audience here are those retailers.
Sure.
And they've learned a lot. And kudos to you all, because you were the ones buying the dip in February, March, and April. You were not selling it. You were the ones buying the dip the last 3 weeks. You were not selling it. So, curiously enough, people with a lot more experience than the new retail trader was not listening to their own advice, while the new young retail trader has matured a lot and has learned a lot about this game. It's not about getting rich quick. They've learned about, now look, they've never seen a bear market.
Right.
People who have been trading for the last 5 years have never seen what a bear looks like. They may creep out from inside their cave there with a Slurpee and a bag of Doritos and go, I'm here and I'm here to stay
for business.
But they've tickled us a little bit. But
before I let you go, 1 million Instagram followers for the Einstein of Wall Street. Talk to me about the ways you've taken your incredible career here at the New York Stock Exchange, built the brand you have, told the stories about the market you have, and clearly it's resonated with so many people around the world, Peter.
Well, first of all, look, I go back, as far as Cheddar goes, to back in the beginning. We had Tucky's Trade Talks. When Cheddar came down to the floor, I had a show on Cheddar called Tucky's Trade Talks with my little emoji guy, right? And I probably had 8,000 followers back then. And so for me, this is, look, I'm a people person. I love, I have this amazing platform that for me, the most exciting thing in the world. I get to reach more people and more eyeballs and share with them what I love to do, that you and I, look, we do it all the time. You've found something you love to do, and that's if I can give anybody really good advice, it's go out and find something you love to do, get good at it, and then, have some fun along the way. And so it's, I'm kind of blown away. I underestimated what the effect of having that many followers is, and I hope I live up to my own integrity and humility as far as that goes. It's super exciting. It's a lot of work. It's a lot of responsibility, and I think I'm up for the game.
No doubt in my head, you certainly are, my friend. 'Tis the season to give thanks and gratitude for the people who mean the most to us.
Yes, sir.
And in this community, am I for your friendship, your guidance, your mentorship every day at the New York Stock Exchange. All the best for Thanksgiving,
Peter.
Peter.
My pleasure. Happy trading and happy Thanksgiving, everybody.